You're listening to Nora and Noah Decode the Day, where markets meet meaning every morning.
Welcome to the Deep Dive. We're jumping straight into, well, a bit of a confusing economic picture today. Global stocks, they're actually up, hitting a 4-week high, mostly thanks to a rebound on Wall Street.
Yeah, seeing that.
But at the same time, there's this, nagging worry about the U.S. economy, especially with President Trump's trade policies still very much in play.
It's a real tension, isn't it? The market seems optimistic on one hand,
Right.
but then you look at some of the underlying numbers and it paints maybe a different story.
Exactly. So to help us figure this out, you've pulled together some recent news articles. Stuff on market activity, those key economic figures, and of course, the latest on trade talks.
Yep, it's got a mix of sources here.
And our goal today, our mission for this deep dive, is really to understand what's driving these market moves, these fluctuations, and get a clearer sense of how these trade policies might actually be impacting things, both in the U.S. and, globally. What really grabs me immediately is this contradiction. How can the stock market be climbing when we're hearing the economy actually contracted? That just seems odd.
It does. It really makes you wonder, is the market looking past the current data, maybe anticipating policy changes?
Or is it just disconnected from what's really happening on the ground?
That's the big question we need to dig into.
Okay, let's start with those market movements then. That global stock index hitting a 4-week high. That's the main headline, yeah?
That's the big one, yes.
And the S&P 500, it had a bit of a roller coaster day on Wednesday. Recovered after dipping early on.
It did. That kind of intraday swing, it suggests the market's pretty sensitive right now.
Jumpy.
Yeah, jumpy. Reacting quickly to news, maybe some underlying nerves, or just people taking profits when they can.
Okay. And what about Asia? Things were quieter there.
More muted, yeah. Futures for Japan and Australia didn't move much.
Yeah.
And you had quite a few major markets closed for holidays. China, Hong Kong, Singapore, India.
Ah, right. That takes some volume out of the global picture.
Exactly. So a bit less activity overall from that region.
Okay, so shifting to the U.S. economic data.
Yeah.
That first quarter GDP contraction. First time since, 2022?
That's right. First time since the second quarter of 2022.
That feels significant. And the reason given was this surge in imports. Businesses stocking up before tariffs.
That seems to be a big part of it, yeah. And also less government spending playing a role.
Can you just quickly break down why more imports means lower GDP? Seems counterintuitive sometimes.
Sure. So GDP measures domestic production. When we import goods, we're consuming them here, but they weren't made here.
Ah, okay.
So in the GDP calculation, imports get subtracted out. A big jump in imports, like maybe rushing to get goods in before tariffs hit, can actually pull the headline GDP number down.
Got it. So it might be a bit of a policy-driven blip almost.
Could be. A temporary distortion, perhaps. And look at how the market reacted to this weak GDP number.
Yeah.
Shorter-term treasury yields fell, so people lending money to the government for, say, 2 years. The yield, the interest they get, dropped. That usually signals that investors are expecting the Federal Reserve to cut interest rates down the line.
Right, because future bonds might pay less interest.
Precisely. So increased bets on Fed rate cuts.
Interesting. But the dollar actually went up. That seems weird with weak data and potential rate cuts.
It is a bit counterintuitive. Usually weaker data or expected rate cuts might weaken a currency. So the dollar gaining strength is something to keep an eye on. Definitely noteworthy.
And the yen was just kind of steady, waiting on the Bank of Japan?
Pretty much stable, yeah. No big policy changes were expected from the BOJ anyway.
Okay. And there was also this report suggesting the U.S. has been reaching out to China more proactively. Could that be feeding into the stock market rebound?
It's definitely plausible. Any sign, even a hint, that trade tensions might ease tends to be good news for the market.
Reduces uncertainty.
Exactly. Less uncertainty for businesses, for investors. It fits with this idea that maybe the market is hoping for or even betting on the Fed stepping in and some sort of easing on the trade front.
Which leads us nicely to what this analyst, Fawad Razaqzada, was saying. He suggests this weak data might actually paradoxically be good news in a way, pushing the Fed to cut rates faster.
Right.
And maybe even encouraging Trump to ease up on tariffs and make some deals. Is that a common market logic? bad news is good news.
It can be, yeah. It's about the policy response. The market might be thinking, okay, the data is bad, but that means the Fed will act, and maybe the administration will pivot on trade. It's about that chain reaction.
And we also saw data showing consumer spending was actually up, even while inflation slowed down.
Yeah, another layer of complexity. Stronger consumer spending is generally good.
But slowing inflation could mean demand is weakening.
Potentially. Or it could just give the Fed more room to cut rates if needed. It's murky.
It is. And another analyst, Krishna Guha, had an interesting take. He thinks this recent data, it mainly shows us the economy before the big tariff shock really hits.
Right. He's saying the full impact might not really show up in the numbers until maybe the third quarter.
So we could be in this weird waiting period, economically speaking?
Possibly. Which leads to Guha's really key question about the Fed's timing.
Yeah, does this uncertainty make them cut rates sooner, like maybe June?
Or do they hold off until July, maybe even September, until they see clearer evidence of the tariff impact?
What are the risks if they get the timing wrong?
Well, go too early, and maybe you signal panic or fuel inflation if the economy's actually okay. Wait too long.
And you risk a sharper slowdown, maybe even a recession you could have softened.
Exactly. It's a tough spot for the Fed.
Okay, let's pivot to the trade policy stuff directly. U.S. Trade Representative Jamison Greer sounded pretty upbeat,
He did, yeah.
talking about first tranche trade deals coming soon, potentially reducing planned tariffs. And he said weeks, not months.
That time frame is interesting. It suggests things might be moving faster than some expected.
Why is the market always so focused on these tariff announcements?
Well, tariffs are basically taxes on imports. They raise costs for businesses, potentially for consumers like you.
Right.
So any news suggesting those costs might not go up or might even come down because of a deal, that's seen as positive. Less inflation pressure, smoother supply chains, better for overall growth.
And Greer gave some specifics. Like India isn't quite there yet, but South Korea's looking good.
Yeah, he said India wasn't finish line close, but talks with South Korea are going in the right direction. A meeting happening pretty soon.
Okay. And he mentioned other meetings too, Japan, some others.
Yep, meetings planned with Japan, Guyana, Saudi Arabia, the Philippines. It seems like the initial deals, if they happen soon, might be with Asian partners who started talks earlier.
Makes sense. And he also sounded positive about Canada's new Prime Minister, Mark Carney, ready to talk trade there too.
He did, which is important, Canada being such a major trading partner.
Right.
So signs of potential engagement on multiple fronts.
Now, President Trump's reaction to the GDP numbers. Yeah, well, it's typical Trump. Blamed the Biden economy. Right?
But also pointed to positive things happening since November 5th.
Yeah, he had that event with CEOs, GE, Hyundai, Toyota, lots of big names. And he was pushing the idea that his tariffs are actually good because they force companies to invest here, build factories here.
That's the core argument, yes. Make imports expensive so companies choose to produce domestically instead. Create jobs here. He said every new factory is a sign of strength.
Okay, that's the narrative. But then you see other data points, like the S&P 500 actually being down since he took office.
Right.
And consumer confidence dipping in April. How do those things fit together? Or do they just not fit?
Yeah, it shows how complex it is. You can have specific investments happening, maybe linked to tariffs or other policies. But the broader market and consumer mood reflect, everything else too. Worries about the overall outlook, the trade war uncertainty itself. It's not just one thing.
Okay, so beyond trade and GDP, what else is moving? Oil prices seem to stabilize after dropping.
Yeah, steadied a bit. They'd fallen below $60, partly on talk that OPEC and its allies might actually produce more oil soon.
Which would push prices down.
Generally, yeah. More supply usually means lower prices, all else equal. And gold.
Sipped a little.
Just slightly lower. Gold often moves on expectations about interest rates and risk. With the Fed path uncertain and maybe slightly less immediate worry, gold eased back a touch.
And this U.S.-Ukraine deal about natural resources. That sounds more geopolitical, but I guess there's an economic angle too.
Definitely. The report suggested it was partly about securing Trump's backing for ceasefire talks with Russia. Geopolitics and economics are often tangled up. Stability, resource access, it all matters for markets.
Okay. And finally, some company news. Microsoft and Meta did better than expected.
Yeah, strong sales from them. eBay also gave a good forecast, so parts of the tech and consumer space seem quite healthy.
But not everywhere. Qualcomm's forecast was weak.
Right. Qualcomm's outlook wasn't great. That shows it's not a uniform picture. The semiconductor industry, for example, is really sensitive to global trade stuff and supply chains.
So different stories depending on the company and sector.
Exactly. It gives you that ground level view.
In tying this all together, Louis Navellier's analysis seems key here. He basically says the future really hangs on these tariff talks.
Pretty much sums it up. His view is get trade deals done quickly, market optimism likely goes up, maybe the Fed cuts rates more easily.
And the flip side.
Delays, more tariffs, that could mean supply chain chaos, more inflation, and that really nasty possibility of stagflation.
Ugh, stagflation. Slow growth and high inflation. Nobody wants that.
No, it really highlights the stakes involved with these trade policies and how they interact with what the Fed does.
So wrapping this up, it's genuinely complex, isn't it?
Yeah.
You've got the stock market rebound, but the economy actually shrank last quarter.
Yeah.
You've got the Fed trying to figure out interest rates. And then hanging over everything is trade policy. Will we get deals that ease the pressure, or will things escalate and cause more problems?
And all these things are connected. Market mood affects policy, policy affects the economy affects the market. It's all feeding back on itself. Makes it very tricky for you, the listener, to navigate.
So given all these mixed signals, this push and pull, if you could have just one piece of information right now to give you the clearest signal about where the economy is actually headed in the next few months, what would that be? And where would you even look for it?
Something for you to think about. Thanks for diving deep with us.
That's it for today's Decode. If you found this helpful, make sure to subscribe, and we'll catch you tomorrow, right here on Nora and Noah Decode the Day.